You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time, once again, for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the old Options Insider Radio Network. Quite a few programs for you guys to choose from on the old network, including hundreds upon hundreds of episodes of this here option block for you guys to enjoy and perhaps learn from and just have a chuckle at, perhaps, and perhaps all of the above mixed together, because that is the option block at the end of the day. Where can you find all of that silly fun? Well, of course, at the mothership, the flagship, theoptionsinsider.com. While you're there, of course, make sure you click around, check out some of the unusual activity we have on the site, some education, some analysis, some of the most actives from the options market, breaking news from the options market, etc., etc. A lot of great content there for you guys to search through and enjoy at your leisure. And of course, you can also find the radio there. Click on the Insider Radio Network tab, and you're pretty much good to go. Or, of course, you can find it on iTunes or TuneIn or Stitcher or pretty much wherever you find your favorite podcast programs, including, of course, our mobile app available for iOS, Android, and indeed the Fire OS. All right. And joining me on the old program today, starting off with the man beaming in from the hinterlands, the woods, the wilds of Maine itself, we have the Rock Lobster, Mr. Andrew Giovinazzi, who's known for his many appearances on the old network, including his time he spent in the jail, the prison known as Option Pit. Mr. Rock Lobster, welcome back to the Option Block program, sir.
The prison known as Option Pit. Well, you know, sometimes it's a prison with golden bars. What are you going to do?
That is true, sir. The meals, 3 meals a day, a place to sleep. What more can you ask for?
Exactly. 3 hots and a cot. That's what it is at Option Pit.
All right, and also joining us, well, we think today he's having some technical issues, so we'll probably try to beam on Uncle Mike a little bit later. But meanwhile, we're going to kick the ball off, get the show rolling. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's catching our eye in today's market activity. We are recording this on Thursday, August 13th. For all of you playing the home game out there. And before we kick off the Trading Block, let me welcome in the other member of our all-star panel, beaming in from the hinterlands of St. Charles himself, Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program from wherever you are beaming in from, sir.
It's a beautiful day out here, just standing right alongside the Fox River in lovely, sunny, scenic St. Charles, Illinois, where I just found out that I only live like 3 miles from Donnie Wahlberg and Jenny McCarthy. They're doing their reality show, and it's taped in St. Charles, Illinois. And my cousin was actually on that show. He was helped him move in.
Well, there you go. The reality stars St. Charles, the Mecca for all things reality TV. You got LA, you got Vancouver, and then, of course, St. Charles. It's right up there.
That's what I was thinking.
Right up there in the trifecta of reality meccas. I'm not sure if that's a good thing or not. I will leave that up to the opinion of the listeners as, of course, we dive into what we're seeing today. It's been a couple of rocking and rolling days. Yesterday more so than today. Yesterday, of course, the big sell-off on the street, and then it pretty much ended with it all getting erased. Everything's terrible. The world's ending. Oh, no, actually not so bad. One of those kind of days, listeners. We ended up actually unched on the majority of the indices yesterday. I'm sorry, up a little bit on most of the indices yesterday. Today was up slightly most of the day. Looks like we're settling off fractionally down on most of the major indices as well. And of course, VIX Cash, despite all the vacillation over the past few days, ticking down a wee bit today, hovering right around that 13.5 range right now. So a lot for us to sink our teeth into. But we'll start with you, perhaps, Uncle Mike, because you are beaming in from the woods, the hinterlands. You never know when the Skype gremlins will cut you off out there. So we'll get you on board and get you rolling. What caught your eye in today's activity, sir?
Well, kind of like what you referred to. It's not necessarily today per se. Today was a rather boring day, but yesterday, actually, I did a day trade. I saw the dip in the morning. I sold a put spread. I was all excited about the dip, and then I go and look, and I realize the market just came right back to where we started kind of by the end of the day, and I ended up getting out of the same put spread in the same day. So that happens to be, I don't know, once a year or something like that. But it was excitement to say the least. In terms of today, and yesterday had a lot to do with the Chinese currency manipulation, or whatever you want to call it, devaluing it, doing whatever it is they do. But with it, today was a rather boring. And to be honest, as a bull, I'm kind of disappointed that we didn't get any follow through today after the big rally that we had after the sell-off yesterday.
Yeah, you essentially had a over 1% rally yesterday towards the end of the session, and then it kind of came out with a whimper today. I think most of the major indices were up, up a quarter of a percentage point or so throughout the day, maybe a little bit more, and then giving it all up towards the end of the day. So yeah, kind of closed the day out yesterday with a bang, and then today with much more of a whimper. Mr. Rock Lobster, what caught your eye out there when you were busy, or when you weren't busy, I should say, catching those lobsters and fending off the bears in the wilderness of Maine?
Today was like, I would have to say Mike had more fun than I did today. I was struggling to find anything to do. It was just kind of a snoozer. Okay, you got the Chinese devalue. It gives us a couple of days of activity and then nothing. Just, we almost touched, we got fairly low. VIX sniffed the 12 handle, didn't quite get there. The vol futures, all the vol products sank a little bit. Just, it was I can just hear the premium just coming out of everything today. So a difficult day also to try to get things done. We tried some clients trying to fill stuff at the end of the day or close to the end of the day, and just nothing really filling of any major significance, unfortunately. So all I could say is I think this market has just run out of steam. I think the Fed is going to hike, and the rally will be, as much as I like to say, like, there's good things happening in the U.S. economy, I think that they are going to hike rates. They will be up this year, even though there's going to be a piddling 25 basis points, and gosh knows when they're going to do something next. But the giant Fed-stimulated rally feels like it's coming to an end, and I think that's the realization of us not being able to break out to new highs. There is no real reason, and it's like every presidential run. It almost is like, you get the bull market through the presidents run, and then the last year it all kind of goes to hell in a handbasket. Happened with W. Got a pretty good rally to highs after the dot-com crash. Same thing happened with Clinton. You had pretty much 7 years of rally, and then everything kind of crashed out by the end of 2001. So it's what do you got? You got 7 years of rally here, and you're running to the end, and the Fed's intervened. And I think we're having a hard time seeing new highs. Even though equity valuations, I don't think are crazy high. I think, they're based on pretty good growth. And the big engine of growth has been China, and they're slowing down to 7%, which apparently is going to cause all kinds of social unrest there. So just it's feeling like we're a little stuck. And unless we start companies, and there's no earnings. So I'm looking for a reason to get excited about equity prices going higher, except for the fact that that's what they've done for the last 7 years.
That's what they're supposed to do. That's the gig, right? You buy them and they go up. That's pretty much what happens out there. Well, all this hand-wringing over China has, of course, led to a quite a few bearish outlooks, a lot of bearish sentiment coming into a lot of names that are very reliant on exports to China, including, of course, most prominently among them, the big fruit company. You can't go a day, it seems like, without looking at any sort of major publication and seeing the next dire piece of prediction or analysis coming out of them regarding Apple. Apple actually faring well today, only off fractionally, kind of following the market today, pretty much unched on the day, right around 115 today. But the latest to dive into the Apple bearish outlook sentiment was Bloomberg today, of course, in their daily options column. Callie and the rest of the team over there do some interesting stuff over there. And today's profile was on Apple puts activity, and in particular, they look at a couple of different things. First, they break it down by SKU, saying the puts out there are costing about a little more than 5 vol points more than the calls. That's the widest they've seen on their Bloomberg data since going back to 2011. They don't say. I'm assuming those are probably near term, maybe a few months out. Your typical, $25 delta put, $25 delta call, $50 delta risk reversal kind of thing. They don't say exactly that level of specificity, but that's kind of probably a little bit too much to expect from an outlet like that that's trying to reach a broad audience. They also mention that looking at just straight up put volume, siphoning out the puts from the rest of the volume, they've been averaging 618,000 puts a day. Well, what they refer to as bearish contracts. So they could be referring to calls hitting the bid there too. They don't really delineate it too much there. So I'm assuming that's mostly puts, but they could be getting beyond that to hitting bids on calls as well. Again, that's the highest 10-day Apple put volume ADV on record. And of course, a lot of people indeed piling in with all of this talk about China, of course, devaluing the currency makes it more expensive to buy those shiny, glittery iPhones and all the other iWatches and all the other fun stuff that they have, on top of the fact that a lot of people are saying the Chinese smartphone market getting a little bit competitive, shall we say. So perhaps China, not the glittering source of wealth on the horizon that a lot of people thought it was. And of course, Apple took it on the chin on Tuesday. Not so much today, kind of unched. Uncle Mike, I won't even bother asking you if all this talk regarding Apple puts and Apple put activity has caused any change, because I know for you, the Uncle Mike Innovation Index is still too low for you to dive back into Apple, even to write a measly, I don't know, let's go crazy, even a 75 put. Just you turn your nose up at it.
If the 70, what are the 75 puts at? Now you got me thinking.
It's actually a good question. I don't know. I kind of just threw that out there. Let's go a little bit farther down the chain so they have some meat on the bone. Let's go out to let's go to October. October 75 puts, 15 cents. Let's go to November. You get a nice 30 cents for November. Does that float in your boat? 30 cent Nov 75 put?
Not quite.
All right. We'll go out to Dees. 38 cents. There you go.
Oh, there's a spread for you.
Squeeze me all the way out to D's for the extra 8 cents.
There you go. No, I'd say it's about as attractive as the what were you messing with me a couple months ago about the XLE 30s?
Yeah,
or
XLE
like that?
30 puts. Yeah, that's a spread. Here's the spread for you right there, or perhaps the put stupid.
The bilateral Apple Energy put stupid.
There you go. I think I see the next educational webinar on the horizon for you, sir. The calendar put stupid XLE versus Apple. I like it. Good trade out there, listeners.
Well, we might as well add FXI to it if we're going to do something with China too. So let's do it right.
Yeah, go big or go home, right?
Yeah. The other thing that I think is interesting about that is the fact that in Apple's upside run, throughout that entire time, just me being the Apple collar devotee that I was for so many years, it was an easy thing to do because there was so much call juice in it. And that's just just weird to hear that all the Apple zealots out there, where's the call buyers?
Yeah, that's
Come on, zealots.
that's kind of what caught my eye too. Apple was the most reliable of any names out there for a long time to have any sort of call premium. So the notion that the puts are lighting it up, that's a bit of a sea change for Apple. We don't see that very often. Granted, it hasn't been as call heavy as it used to be for quite some time, well over a year. But still, that was one of the more reliable names. If you're going to go anywhere to get any sort of upside call premium, I don't care if it was covered calls or verticals or whatever you're looking to leg into, Apple was the name du jour for a long time. And to see that the puts are trading at such a hefty premium now, kind of interesting, perhaps a little bit sad. Perhaps it is indeed you're out. The puts are getting bid up. Perhaps it is the end of an era for Apple fans out there, Uncle Mike. I don't know what to make of it. I'm shedding a single tear over here. You'd see me if it was video.
Yeah, it's something else. I don't even know what to do. I mean, if there's no Apple, I mean, I got all my energies focused on real trades now, or I guess not real trades, but more index style trades now. And I don't know. I mean, my kidneys are really healthy, so I'm gonna have to. Maybe I should start trading like CMG or what's that? The Stealth Apple and
Chipotle.
I need to start messing with that. Yeah,
the Stealth Apple. You know, they wrap it in tinfoil, so that adds at least a $10 premium right there to the stock, right? So I mean, it's good stuff.
There you go.
I like that they wrap it in tinfoil. They wrap your stock certificate in tinfoil.
They should.
I will say
that would be a nice little tip of the hat for all the Chipotle buyers out there.
The reason why Apple was generating so much activity is you realize volatility in there the last 3 or 4 days is like 50%. So it's moving $5 a day. Every day, that's actually closer to 75. So whatever was going on in Apple, they had the big rally, then the big sell-off, and, And so Apple is moving enough to generate that kind of juice. And, for a while there, you had Apple volatility was actually trading higher this week than it was during the earnings cycle. So that tells you something.
That tells you it's all China, baby. Earnings, schmurnings. It's all about China.
Yeah, if no Chinese people want to buy iPhones anymore, there goes the growth. And, I think Mike was bullish when Apple had new products they continually were launching. And right now they're sort of, they're just putting new treads on the tire at this point.
You missed him. You missed what he said.
Business.
Oh, yeah, you're right. I didn't mean to cut you off there. You missed what he said in the last show, but he has a new index now for Apple. It is the Uncle Mike Innovation Index, and it is the UMII, and it is far too low for his taste in Apple right now. So regardless of where the stock is, that innovation index doesn't tick over whatever numerator denominator he has in there. He's not going to budge.
I don't blame him.
That's what drove it up in the first place was innovation. I mean, Apple didn't go up from market manipulation. I mean, they're not a bank stock. That's what bank stocks do, for crying out loud. I mean, Apple went up because they had phenomenal marketing of their products and they changed the world.
Yeah,
they ain't doing that anymore. They haven't invented new stuff.
The UMII is hovering around about a 0.6 right now. I think it needs to be at least a 1.3 or higher for Uncle Mike to dive in. So maybe you should disseminate that on a daily basis, Uncle Mike. You might get a follow or two out of that, I think, if you start publish the Apple Innovation Index. Someone would pick that up, I'm sure.
I guarantee they would. You're right. If you ever say that, I still remember about 2 or 3 years ago, I did a webinar. I just called it Apple. Everything that I'm just going to talk about Apple for an hour. And that was like one of the hottest webinars I ever did.
This is genius. You don't need to say any more than that.
That's all I said was Apple.
That's fantastic. I'm looking at the numbers here today. I would love to see exactly what they define as a bearish contract, if it's just puts or if there's more to it. I have a suspicion that there's more to it. Looking at the numbers today out there in Apple land, it's not as put heavy. It's pretty much 1-to-1 calls over puts. So the put love, at least today, not lighting it up. Also, about net deltas, about 1 million long net deltas today, which is pretty sizable for Apple, actually. So looks like they're trending towards the bullish contracts today. We'll keep an eye on that. This is certainly not the last time we'll be chatting about Apple. We'll keep an eye on the old UMII as well. We'll let you know if Uncle Mike give us regular updates to let us know when it ticks above his required level. Before we dive into the odd block, I just want to touch on something else really quick. It's something that probably will impact a lot of our listeners, even though they may not be aware of it. In fact, right now, as we're recording this, Gary Katz, he's the CEO of the International Securities Exchange, has been on our network many times. He's testifying in a public hearing before the Department of Labor, trying to argue against a lot of these new, essentially, prohibitions. A lot of our listeners, a lot of people out there in general, and Uncle Mike, this falls in your bailiwick certainly as well. A huge use case for options is indeed in retirement accounts. In fact, we get a lot of questions all the time. What can I do with options in retirement accounts? People are writing covered calls, they're putting together collars. That's a large percentage of options volume. In fact, I have a stat here I pulled out of the OCC. They estimate about 15% of individual investor volume, options volume, obviously, currently comes from IRA accounts. So a very substantial amount. You get the advisors and others in there. It probably is a higher number even than that. There was a proposal put forward recently by the Department of Labor. It gets really deep into the weeds of governmental minutia and proposals, so I won't bore you with that, listeners, except to say that there is a fiduciary proposal with the Department of Labor that essentially defines what assets advisors can be compensated for, that would permit advisors and financial institutions and their affiliates and related entities to receive compensation for services provided to, quote, retirement investors in connection with the purchase, sale, or holding of an asset. And in this exemption, they define what an asset is. And they define it as bank deposits, CDs, shares or interest in registered investment companies, which is mutual funds, of course, bank collective funds, insurance company separate accounts, exchange-traded REITs, exchange-traded funds, corporate bonds offered pursuant to a registration statement under the Securities Act, blah, 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 agency debt securities, U.S. Treasury securities, insurance, and annuity contracts. I'll even put annuities in there, guaranteed investment contracts, and exchange-traded equity securities. And that's it. What did you notice was not in that list, that was omitted strategically, or perhaps not so much, just perhaps a sin of omission? Options. Options are not in there in any way, shape, or form. So there's a big fight now between all sorts of industry proponents here, going down to the Department of Labor and others to try to rectify this, because that is a huge oversight on their part. And if this proposal goes through, if now all these fiduciaries are essentially not receiving compensation, or perhaps they can't even utilize options in a lot of these funds, that would be a huge blow to not just the industry, but to you guys out there as well who want to utilize these products on a regular basis. So they're trying to change that. That's what testimony is going on today. But this is a huge development, and Uncle Mike, this would certainly impact your business. This would probably impact a lot of your mentees over there as well, Andrew. So far, it hasn't been voted on. It hasn't become any sort of proposal that has been accepted yet. But it is a scary, scary thing, and it's much closer to becoming reality than perhaps we and everyone, I thought, initially thought when it was first put forward. So interesting, kind of scary stuff. I don't know if Uncle Mike, if you or Andrew have been following this at all, but it's kind of been the talk of the town around the old options water cooler for the past month or so. And we're hoping that at least it'll get shot down or changed, because if it stands the way it is, the old retirement advisor business may change markedly over the course of the next year. Uncle Mike, imagine if there was a prohibition against, or at the very least made it much more difficult for you to use options in all those retirement accounts. Imagine what that would do to your practice.
Well, I'd have to become a full-time football coach. That's what it would be for me, because that is my practice for the most part. Yeah, so I have many thoughts on that. First off, I want to start with a story in terms of using options in retirement accounts. This was back in May of 2010 in the flash crash. And I think that was it then. It was May of 2010. But anyway, I still remember this day clear as day, actually. And it was back when Mike Cavanaugh and I, we were just starting off in this tiny little office that wasn't really much bigger than a closet. And we were in a building that housed a bunch of hedge funds. Now, folks, hedge funds deal with real money, at least the hedge funds that were in the building with which we were in, right next to the Board of Trade. Excuse me. And so when the flash crash happened, if you were to just walk down the hallway, it was the most amazing scene just to hear all the screaming and yelling that was going on. We had been in that building for about a year, and I had never heard anything in that hallway ever. But in that hallway, just the screaming and yelling that was going on, the millions of dollars that were being lost right there on the spot, it was mind-boggling. Mike and I thought that somehow we had just gone to war. It was a very crazy thing. Now, we had probably, I don't know, maybe $30 million of assets that we were in charge of at the time between the two of us. I forget what the number was. But nonetheless, we wanted to do the responsible thing, say, okay, are people out of things they shouldn't be in right now? Are we hedged? In all honesty, for other people that were dealing with the issues of, oh crap, what do I do? Should I get out of this right now? We're down 10%. Are we going to go down another 10%? Those people were dealing with those issues. Mike and I had our issues resolved in probably about the time frame of maybe 2 minutes. And within those 2 minutes of all the assets with which we were managing, we're like, okay, we're hedged. You know what? The Dow is down 1,000 points. Let's look again just to be safe, because it was a little bit nerve-wracking. We looked again. We were hedged. There was one guy that had a sizable account that was trading on his own that we had to work an order for. But other than that, all the issues with which we had with that flash crash, with retirement accounts, with people having their money in their nest egg, we're like, okay, cool. Our concern was more along the lines of what the heck's going on, as opposed to what's happening with our clients' accounts. Now, I'd like to see someone come up with a proposal like that when something like that is happening. I'd like them to just be in that hallway and just hear all the crying and yelling and screaming that was going on with real money from real people when something like that actually happens, and then say that options used as a protective measure should not be in an IRA. So I think that's horrible that they're even considering doing something like that. And quite frankly, I don't like thinking about it too much because it angers me that much. Now, in terms of this actual case of what they're doing, I think it's going to get shot down, quite honestly. It could go through. You never know. But the reality of it is that options can be a very lucrative thing for big brokerage houses. Big brokerage houses have a very big voice on Capitol Hill, and I don't think they want to do away with that. A stock is something that's going to trade, just on average, someone trades a stock. I don't know what the numbers are, but a stock you're going to trade maybe once a year, twice a year. Options, you trade them almost once a week. So I have full faith in the brokerage houses that they're going to find a way to come together and not allow this to happen, because that is a big part of the business. Not to mention the OCC, the exchanges, people like that. I think that we have the winning hand here because we're right in this issue. And I'm not a very political person. I've said that on this show many times. I'm not a fan of either party too much. I have more conservative beliefs, I will admit, but the party that represents the conservative ideals, I think, doesn't represent it very well. So hence the reason I'm not very politically outspoken. But this is one issue where, come on, politicians, you got to do something about this. Help the people out, get it done. I think it will get done, in all honesty. But in the meantime, we as an option trading community need to stick together, and we need to monitor this, because if that's the case, we need to let our voices be heard. 26th Amendment happened in the 70s. And the concept was that if you're going to ship off an 18-year-old off to fight in Vietnam, he should at least be able to choose his leaders. That amendment happened in probably about 3.5 to 4 months. Now, the reason it happened is because the people spoke out and the politicians heard it. So with that being said, I don't think a constitutional amendment is needed that you have to be able to trade options in your IRA. But my point is that if we speak out, and if we need to speak out, we need to speak out, and we will speak out. And that's my take on it.
I like it. A constitutional exemption for options. I like it. Let's write it into the Constitution right now. You get your firearms, you get your right to free speech, you get your right to a covered call. Why not? Right?
5 puts.
5 puts. The founding fathers clearly would have foreseen the need for hedging and income generation. They were very savvy. Ben Franklin, you tell me he wouldn't have been all over options? He would have been all over.
Yeah, he would have.
So, yeah, I think we need to, let's just go beyond the Department of Labor. Straight, I like where you're thinking, Mike. Think big. Go straight to the Constitution. We'll write it in an amendment, options, the options amendment. I like it. That's good stuff. Well, listeners, if you, all joking aside, if you are interested in this and concerned, and quite frankly, you should be, you want to check out more about it, just search for the best interest contract exemption or BIC exemption proposal, something along those lines. You'll get pretty deep into the weeds pretty quick. I caution you, but it's the kind of thing that can impact you at the end of the day. If all of a sudden the IRA custodians for your account suddenly tell you, hey, you can't do options in them anymore, or it's going to be much more expensive, or whatever the case may be, that will impact you. So if that's happening, you need to know about it and hopefully let your voice be heard. And hopefully the industry is doing that on your behalf right now. Hopefully that will take care of it, but sometimes you never know. Interesting stuff. Don't mean to be alarmist, but sometimes these issues kind of have to be raised. Talked about it on our advisor show, which is, this is of course very pertinent to that audience, but I thought we should raise it here as well because the active trading crowd certainly needs to know what's going on with their retirement accounts as well. And now it's time for us to get out of the old alarmist block and keep on rolling into the sometimes equally alarming odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the old Odd Block. This is indeed the portion of the program where we talk about what's moving, what's shaking, what's catching our eye over here in the shadier, the more dubious side of the options space. We're going to kick things off. Once again, cover your ears, Uncle Mike. I know this name is alarming to you, even though it isn't the old one. SYSCO doing very well. The other SYSCO, this SYSCO we're talking about today, of course, SYSCO. Talk about them again. This is the repeat performance for them here in the old odd block today. And today pretty much unched down a little bit on the day to 38.5 or so. This is the name that does about 4,800 contracts a day, doing 16, nearly 17,000 today. So some pretty sizable activity going up today. The lion's share of it going up here on the SEP 38. So these are actually in the money calls, about half a buck in the money going up. Paper selling started off with a block of 3,500 for $1.45. As the day went on, a total of just a hair under 6,000 going up here on the strike. For prices around that range. They went out $1.60 at $1.65 actually. So this earlier kind going up kind of at the low of the day for these. They went up. The earlier kind went up in one block on the Philly. The latter kind went up on some scattered blocks. I should note as well with that earlier 3,500 lot, we saw about 100,000 shares going up for 34.40 again. So this was a pretty aggressive sale of these calls. Digging in here on the open interest, this is a pretty sizable open interest on this strike to the tune of nearly 38,000 contracts here. So this has all the hallmarks, the low price here, the aggressive nature of the trade, someone not really minding perhaps to give up a little bit to closing out a trade that's kind of gone their way. So perhaps it has all the hallmarks of a closing trade, in which case there's about 30-odd thousand more to go. So buckle your seatbelts, listeners. But who knows? Perhaps the Rock Lobster will have a contrarian point of view, and we shall proceed into a violent and vehement crossfire session. Mr. Rock Lobster, do you agree closing, or are you going to throw the glove down and say it's all opening?
Mark, you ignorant. Oh, no.
I was waiting for it.
I had to edit myself. I think they very well could be closing. It's a very short position as priced. So they're either aggressively selling the 38 calls against an equity position, or if you had the opposite position on where they were long all the calls and short all the stock, this would be an unwind of that, right? Which means they probably did okay. SYSCO just made a big move from like 36 to 38.5. So I think they could be unwinding what was, potentially a back spread a little early. They got a little bounce in volatility and they went, woohoo, I'll take my money and go. And they got another 37,000 to go. So I was on the fence of it when I looked at it, but they're either that or very aggressive, sale. It's almost like two calls to one stock or something like that. So I would guess somebody made a little bit of money on this one. And they're getting out of the vol up too.
If he's sitting on 37,000 of these, and that was a pretty sizable woohoo, I think, that he let out. He doesn't care if he gives up a nickel 5,000 times or a dime.
I think it's a double woohoo.
Yeah, that was a sizable woohoo That was an Uncle Mike-sized woohoo over there on that one. He's, like I said, he's probably got more to go. So we'll pay attention tomorrow, listeners, to see if our friend keeps hitting that bid and perhaps even going through it just to unwind all these calls that are 50 cents to the good for him right now. As we move on to our next name here, this is one we check in on with some frequency. This is the Spider Barclays Capital High Yield Bond ETF, aka Junk. JNK, pretty much unched on the day today, about 37.15 or so. It's the name that does about 1,300 contracts a day, doing about 20 under 5,000 today. So a pretty active day. And of that 49.80 going up today, 4,500 of them went up in this one pretty sizable roll. We saw the AUG SEP 37 put roll going up, 37 put spread, I should say, really, going up 3,000 by 1,500 times, 15 cents on the AUG 37s, 55 cents on the SEP 37s, so doing that roll for 40 cents. Obviously buying SEP, selling AUG, so he's keeping the bearish position, as Bloomberg would say, a bearish contract. Open here on JNK, about 3,300 open on the AUG 37 puts, and almost 3,000 open on the SEP 37 puts, which is kind of interesting. So some open interest, similar open interest actually on both strikes. So it could indeed be perhaps he's adding on, but I'm going to lean more towards the closing and rolling type of trade. You'll notice, listeners, if it is indeed a roll, he's not exactly swinging with as much size anymore. He's doing essentially 50% of the contract size on the farther out strike. Not usually an indicator that our friend is perhaps playing with house money, but perhaps actually got his wings clipped a little bit. The earlier kind went up. They went up in pretty much 2 blocks on the Philly, and so they're still in the ball game. They're still keeping those puts alive, but not quite swinging as big as they were in the heady days of August. Mr. Rock Lobster closes out here on Junk, and our friend not really perhaps rolling with house money, but perhaps digging a little bit deeper into his own pockets here to keep the puts alive in Junk.
Don't you feel like he reached into the pockets to grab whatever loose change he had?
That has that feeling of it all over it, yes.
I think I've seen a lot of this trade in bonds this year where, okay, they're going to raise, they buy puts, and it doesn't happen. You get it for a little while, and they pop right back again. Mostly because I think everybody realizes that, I guess we have to buy bonds from that country that devalues their currency randomly. And you look at the emerging markets, and you're like, oh, wow, they're at the very dead bottom of their 2-3 year lows for emerging markets. So I've seen this trade time and time again. It has worked timing wise, where we do get sell off in treasuries and bonds in general. And I think this time they just didn't quite make it. They were looking good probably a few weeks ago, and then not quite so good. So they're going to try to grab, I believe they're going to be able to grab the SEP Fed announcement with that trade. I'm not quite sure if the timing is right, because I know the Fed's going to come out, do whatever they're going to do, yes or no, in September. I'm just not sure if the SEP cycle will cover it. I've got to look on my economic calendar. I haven't gotten that far in the world yet.
That's analysis for tomorrow, sir. We're here just looking at the options numbers in and of themselves. But yeah, it doesn't look like our friend there is swinging for the fences as much as he was just a month ago, but still keeping the dream alive. As we move on into our final name, this is the Tech Spider, aka XLK, trading today. Another one pretty much unched on the day, about 42.25 or so. This is the name that does pretty decent volume certainly for odd block standards, about 9,000 contracts a day. It's about 30x the typical name we talk about here. Doing nearly 23,000 today here, so a very active day. And of that 23,000, nearly 18 of it coming in one pretty sizable trade. We started off profiling big 1 mega block, 15,000 to be precise, of the AUG 42 puts. Going up, paper buying for 36 cents. Going up in 1 block on the Philly, where such trades like to reside these days. And again, we got some decent, actually not much open interest. This is pretty much all opening paper here, I meant to say, here on this strike. As the day went on, another almost 3,000 piling into the tune of 17,800 and some change of these puts going up. They went out a little bit lighter. They went out about 27 cents at 30 cents. So that initial 36 prints, he's wearing that a little bit, but again, you gotta make some accommodations to get a print of that size, a block of that size done here on this name. This appears to be, as it looks on the surface, straight up buy/hedge here of the old XLK. No stock that we saw going up with this trade. There is some decent open interest on the 41 halves, just a half a strike lower, 15,000. So this could perhaps be related, but that would be a very, very tight spread he'd be legging into. Again, we've seen odder things here in the odd block, but I do want to point that out. Not all strikes are just 500 contracts are out there. There is a little bit of open interest, but I'm going to lean on the side of that being unrelated. But who knows? Perhaps the Rock Lobster will defiantly throw that back in my face for our final name here and say, of course not. He is indeed legging into the 41.5, 42 AUG put spread, 17,000 by 15,000 times. Is that your position, sir?
I'm possibly.
You're no fun today.
It is my position. I think that you buy those puts at your peril, and I think they were looking to game a big follow through this morning. Tech wreck with Apple, back down to the, kind of the bad old spot, and they didn't get it. They didn't get the tech wreck that they wanted. And as of right now, so they're either covering those puts, covering the strike below puts, probably for a credit, or they're swinging for the fences that we're going to fall apart next week. So as of today, though, I think those puts got marked down to 20 cents or something. So volume absorbed the 30,000 or 15,000 puts and said, okay, we'll sell them to you and we'll go on. Like, not even a worry.
Yeah, that was pretty surprising to me that they would mark them so aggressively in his face after they just pretty much took down 18,000 of these things. You think they would hey, more power to them. I guess the market makers out there are just big time guys who can take a 20,000 almost like it's going out of style.
I guess so. I was trying to think of if he somehow aggressively offered those puts and they were traded, but I mean that first print just went through very, very difficult to figure that out. But I mean, and volatility is down on the strike, so I thought I maybe possibly held out that somehow, even though they were just lifting offers all day long on them and they traded through the offer, that somehow they could be printed all out of sequence or something. But I don't know how that could get filled like that. So that was why we call it the odd block, because it's just odd volume.
This whole thing is odd. The first thing that caught my eye was, you're right, that they are marked very aggressively for having just bought 18,000 of them in their face, and the stock having sold off about 15 cents. They should be bid right around where they were trading, yet they're marked 6 cents against him. You're right. None of that really makes a heck of a lot of sense, and it kind of leapt out of me earlier. But yeah, when they're printing through the bid, I mean, it could be an out of sequence print. It could be a very aggressive sale that went up out of sequence. That's a lot of parts have to kind of fall apart to make that work out that way. But everything else is kind of screaming that someone was hitting bids out here, because the vol's down, the strike's down. This is an odd one. Listeners, take a look at it yourselves and let us know what you think on this weird nearly 18,000 lot buy that apparently crushed vol. On this trade.
Exactly. That's the thing. How does it do that?
These guys, the market makers, all collectively said, wait a minute, I got more of these to go. How are you? Just sold them at 36 cents. How are they now? At 30. Oh.
And I think it feels like it's a little bit of a tacit play, maybe that Apple's done with its big down moves or whatever. So they're just, instead of selling Apple, though, they're going to sell the ETF and try to get that money. But it says buy, everything says buy, lots of buying, but somehow it feels like sell.
Yeah, if I just looked at that print, like when I first looked at it this afternoon when we first started, I just looked at thought sell, because that's what everything else screams to me. And then I started reading and I said, that doesn't make a lot of sense. Hey, AKA a good candidate for the odd block. That's why we do this segment, listeners. Sometimes it's fun to analyze and parse some of this this weird paper, but now it's time for us to mosey on out of the skid row of the options world and mosey on into some of your questions, because we're running up against it, but I want to make sure you guys get some time on the show. So let's dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know how to reach us. Options on Twitter, or, of course, questions at theoptionsinsider.com, or just post a comment on the Options Insider. Find us on Facebook. It's all out there, ready and raging to go. Let's dive right into some of your questions, see how many we can squeeze in here. We got a bunch coming in, including a bunch from one of our frequent tweeters, responders, listeners, Mark B. He's been writing in with a lot of his trades he's been doing lately, and they seem to be working out pretty well, so good for him. I'll look at a couple here. He said he sold the front week SPY call spread at the money plus 50 in the last outer on Friday. A sucker went out worthless, day trading Monday through Friday, and he used a market order to get filled quick, whereas I use midpoints for slower trades per our specific advice. Thanks. I don't remember using the market order part, but I'll have to go back and listen to one of our shows. But I'm glad it's working out for him. But he followed up with a question, actually, which is kind of interesting. He wrote in and said, hey, is insurance against assignment legal? Why not pay a fee for the broker to absorb your assignment risk if your strategy prefers it? And I saw this and I wrote back and I said, what are you trading? And he wrote back and said, SPY. I said, well, SPY. Then you have the answer right in front of you. It's SPX. That's what that product exists for. You got to go European if you don't want to deal with the assignment risk. But that obvious answer kind of aside, he does raise an interesting point. Is there sort of going European? Are there perhaps some other routes? I've never heard of a broker essentially offering an additional option on the options to cover the assignment. Have you ever seen such a thing, Mr. Rock Lobster?
No, I'm trying to the thing is, when you're mathematically you're going to be assigned on certain times, usually for a deep in the money put, hard to borrow, or a dividend. I mean, and you can look at that's what kind of option education is for. You can look at where the options are priced, and you can gauge your chance of assignment risk just based on how the combinations are priced. So it is in the options to some degree. So if you're trading options that have a high degree of assignment risk, you should learn how to price option combinations, and then at least you have a pretty solid statistical answer to why that might happen. So, or if you just, I'm in the money, or my options are in the money. I think if he's worried about random assignment risk, then you just close the option beforehand.
Yeah, I mean, SPY is a good one on that because they have a pretty regular dividend cycle, so you're not going to really get caught unawares in terms of the timing. The amount of the dividend could catch you. So if you're worried about that, of course, and we counsel people all the time close out their positions ahead of the SPY dividend. People forget about the SPY dividend all the time, and it really catches a lot of people. So you could certainly be caught up in that. And if that's your concern, yeah, just close out going into it. There's no need. There's no secrets there. But yeah, aside from that, aside of not trading around those times, there aren't any other real means aside from, I said, going straight up European, and then don't worry about it till X day. Uncle Mike, anything you want to add here for our friend who's looking for a way to buy an option on his option to protect against assignment risk?
No, I think Andrew pretty much said it all. I just always try and put myself in a position, if I'm ever selling options, to where if I am assigned early, it's a good thing. Meaning if I like trying to just stay in a position to where the puts are out of the money, or whatever the case may be, so that way I don't have to worry about it. And if I get assigned, I tell the person on the other end, thank you.
Yeah, I mean, that's the thing people forget. Typically, early assignment, random assignment can be a good thing. You're going to get something nice in your account back. Oh, that's nice. Unless it's coincides with some horrible surprise in the underlying, some horrible surprise announcement. That, of course, could leave a nice mark. But a random assignment, sometimes someone doesn't know what they're doing or something else like that. You can actually have a nice little bonus waiting for you in your account. So not all assignment is a bad thing. But yeah, short answer to your question, Mr. Mark B there. Insurance against assignment. I've never heard of such a thing. I don't know anyone who has. Maybe you should bring it up to your broker. Say, hey, I'm willing to pay this extra fee I'm sure they'll be willing to listen to that conversation if you're willing to offer them additional fees. But yeah, you shouldn't really need it. You have SPX and you have very regular dividend schedules and Proclex SPY and others. So it's not. I don't think it's something that's really going to be too much of a concern. But interesting question nonetheless. We like these little thought questions that you guys send in for us. It makes it fun. Meanwhile, unfortunately, I'd love to hit on more questions. Unfortunately, we're kind of up against it. We got to keep on rolling into our next segment. We'll get to more next week, don't worry. But now we got to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're keeping an eye on for the rest of the week into the old weekend. And really quickly, before we dive into some of that stuff, I know a lot of you guys have been writing in and asking about SHAK. You know, when are we going to get options on SHAK, good old SHAK. It's been selling off pretty aggressively of late. Of course, the lockup expired at the end of July there. In fact, they were supposed to list options on the 29th of July, of course. That, of course, didn't happen. Actually, it was going to list on July 28th. That day, the SIBO announced they were going to push the ball back a little bit because the lockup was going to expire, and that was going to complicate things a little bit. I'm sure people looking at what's been going on in the stock over the last few sessions wish they had some options listed on it. The thing sold off 10 handles today alone. It's off about 20 odd handles just in the past few sessions, so some puts would have been nice. But if you are holding out for options out there on SHAK, just as we were coming onto the show today, I got a release from the SIBO saying that they're going to list options on Shake Shack beginning Friday, August 14th. So if you guys can hold out till tomorrow, then you'll be all set. Hopefully we won't have another day like this, or perhaps if they do, you'll be ready for it because there will be options. So all of you have been writing in saying, where are my SHAK options? There you go. Come in tomorrow. All right, aside from SHAK and aside from the back and forth with the Fed and, of course, earnings tomorrow, just pretty much JCPenney, aside from that, Uncle Mike, we'll start with you. What do you keep an eye on for the rest of this week into the weekend?
Yet again, a broken record, 213.78 in SPY, waiting to see if we can break a new all-time high. Been watching it for, well, all year. So I'm hoping that something happens at some point so I can start being my typical bullish self again.
Yeah, it's a weird show these days. You're not bullish. You're not an Apple. I don't know who you are.
I'm evolving.
You're evolving. We got to find the next holding that you're evolving to so we can debate it and analyze it obsessively here on the program.
That'll be fun.
I'm looking forward to it. Whatever exotic $3 or penny stock you fall into, I'm looking forward to learning about it. All right, so Mr. Rock Lobster, what's catching your eye for the rest of this week into the weekend, sir?
I just hope I don't nap tomorrow.
You'll be too busy slinging puts on SHAK. You kidding me?
Oh, yeah, I know. Sebastian he's like, he hates that stock. He likes the burgers, doesn't like the stock. But I see more of the same, just market not going anywhere. I truly believe that the QE is off the market, and until corporate earnings start to rise, or until you have the BRICS start growing again, Russia's in the bottom. It's just all the commodity stocks. It's like, how do we rally when all the commodity prices are so darn low? Now, this has happened before in the late 90s. Commodity prices were at super low levels, and we had the technology boom, and stocks to go up, and the valuations on even all the big technology companies are 13, 14, 10. I think Google now, when it just jumped $100, is probably in the 20s, like the low 20s for multiple. But nothing is outrageous in technology land except for the value of all the pre-revenue or the pre-market IPOs that are out there, like Uber at 50 billion or something. But Uber's worth 3 times more than Twitter right now. So, our valuation's totally nuts, I guess, in VC world, but in the listed world, all those companies are not. They're all coming back. All their valuations are catching up with them. So, I just think you need a reason to be bullish at this point, and right now I just can't think of a very good one except, it's like Tusa says, you're selling put spreads. It's not exciting, but it pays the bills. What are you going to do?
Well said, sir. And unfortunately, we'll have to leave it there. That's all the time we have for the Around the Block segment for this week. But really quickly before we go, let me check back in with my cohorts here on the old All-Star panel. See what they have cooking that may interest you. Uncle Mike, we'll start with you. In addition to your XLE Apple Put Stupid webinar, what else is coming down the pike from RCM?
Calling all self-directed traders. If you want to trade through the RCM branch at either TD Ameritrade or Interactive Brokers, we might be able to give you a discount commission depending on what your rate is now, and we'll be able to provide you with advice that we know for sure. Feel free to give me a call, 312-212-3531, or send me an email at mtusa@rcmfs.com.
And Mr. Rock Lobster was cooking in the land of the pit.
August 22nd, we have our 3-hour teaching session on flies and contours and how to price them. If you want to get a flavor of it, go to our website. On the blog from yesterday, Mark posted kind of what we'll call the teaser video that he did last night. We had biggest audience we've ever had, so somebody must like the stuff we're doing. And but we'll go into more in-depth analysis and ideas on what makes a decent condor or butterfly in our August 22nd Saturday morning course.
August 22nd, an auspicious day, your webinar, my birthday. What more could you ask for?
Only great things happen on that day.
All the great things happen. I think a few invasions happened around that time. It's just a great auspicious day in terms of history. So good stuff. Check out that webinar over there at optionpit.com. Make sure you drop a line to Uncle Mike as well to see what he can do for you if he can leg into, he won't leg. He will initiate that XLE Apple Put Stupid on your behalf. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. We'll get to more of those next week. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.